And the central theme of today's little fireside chat is there's always a reason to not trade. There's always a reason to not trade. And we can always make excuses to find a reason to not place the trade. I'll just wait. Whatever the reason is, I'll just wait. So that's the central theme. Anyway, ahoy there. Again, I can see everyone's still logging on. So let's get cracking. If today is your first day, type of agenda that we have is we spend about 20 to 30 minutes talking about the central theme, as I've just mentioned, and we usually spend up to about 60 minutes talking about markets and whatnots. Again, the central kind of conversation I want to have is there's always a reason to not trade. And if today is your first week, my name is Phil Newton. I am not a Wall Street guru. I'm just a regular guy who cracked the code, and it is simple to replicate. Again, I found my success quite a long time ago. I'm very fortunate to have got into trading very early on. I was hand drawing charts in the early 90s, mid 90s. And I am the type of person that likes to stop tourists to see if they need directions. I do like helping people. When I had real jobs, it was always in some sort of support and mentorship type role. So it's just in my personality. So I do want to help you see your success either through these 3 sessions that we do every week, or if you'd like a more formal arrangement, I do offer mentorship programs. I do consider myself to be a lifestyle type of trader. At the moment, I'm enjoying urban rambles. Last week, you might remember, I showed you some of my photos of one of Liverpool's cathedrals. The one on the right is, I'm very pleased with this one. The sun just caught the cathedral. I managed to get a side-on view of it this week. So it's just a little bit of an update. Again, I'm just enjoying going around my city centre and doing a kind of a touristy type thing. And that's what, for me, lifestyle is. I get to do whatever I want to do. Whenever I want to do it with whomever I want to do it with. And at the moment, I'm really enjoying, going for walks 2 hours. To be fair, I know Anthony's kind of in this group. We've had some chats. I know you like your long winding rambles as well. So kind of took my inspiration off your 10K daily walks, and it prompted me to do my own daily walks. So this is where I've ended up, several months later. Anyway, my name's Phil Newton. Been trading full-time since 2001, hand-drawing charts since the early 90s. Been calling most of my trades out in real time since 2004. I've managed private client accounts, ran my own fund with assets under management of 10.3 million. I've coached thousands of students with my programs, and I've personally mentored 756 traders. It's a few more now, from retail traders through to hedge fund owners, banks, and institutions. Specialized in Forex for the first 12 years, traded futures, stock options for over 25 years. And right now I do focus exclusively on stocks and stock options. The one thing that is universally true, as I mentioned earlier, is I'm obsessed with helping serious traders replicate the type of success that I've had, so that you can do whatever you want to do with whomever you want to do it with. So that's what we're going to try and touch on in part today. As I mentioned, the central theme of today's chat is always, there's always a reason to not trade. There's always a reason to not trade. And I was inspired by 2 or 3 similar questions in the various communities. I've got a Facebook community and a Slack community. And this was pretty much the answer that I gave to a question: should I be worried about ... But it's very easy for us to find a reason to not trade, either the bullish trade or the bearish trade. There's always an excuse. And it kind of stems from one of the 3 main emotions that we all experience. And we all experience them at some degree, even having done this for 27 plus years now. We all still experience fear, hope, and greed. The difference between where I'm at in my trading journey and maybe where some of you are right now in yours is I've learned how to deal with these things. Maybe you're a little bit hesitant about some trades. There's things that we can do about them. General rule of thumb is reduce your position size. Reduce your position size is the root cause of most of the emotional experiences. But nonetheless, it's fear that we're going to focus on today. The fear that's keeping you out of sensible on strategy trades. Let me say that again. Fear keeps you out of sensible on strategy trades. And what I mean by that is your trade sets up according to the parameters that you've set, that you've dictated, that you've researched, that you've traded before. But for whatever reason, you don't place the trade. Fear keeps you out. You keep finding an excuse to watch and wait. And that's what that type of trade, and we've all experienced this at some stage. I've certainly experienced this in my career. And I actually experienced this by proxy. My first full-time job as a trader before I actually went self-employed back in 2000, I had a brief stint trading for a fund. It was actually a software company that had a fund, and I was a trader for their fund side of the business. And they had this black box software algorithm, if you want to call it by a different name. But back in 2000, they had this day trading software. And back then, as you can imagine, technology is reasonably new. It's accessible. The internet's almost brand new. And it was, quite revolutionary at the time, whereas these days it's pretty commonplace to find software solutions. Anyway, we were trading their software, day trading. It was pretty good. It was pretty accurate. But every day, the owner of the business would come in and go, just wait till after 9:30 because there's news out at 9:30. And then it was, there's a news report at 10 o'clock. Don't take that signal. Don't take that setup. There's a news report at 10 o'clock. And then suddenly it's lunchtime, so we break for lunch. And then it's a case of, I'm in the UK, so the US markets open at 2:30 in UK hours. So let's wait till the US markets open and see how they impact the European markets, because we're trading European index futures, Dow, DAX, FTSE, DAX, FTSE, IBEC, the CAC, what's the other one? Anyway, it doesn't matter. European futures is what we're doing. So there was always a reason, and this has happened 2-3 times a week. So, from 9 o'clock in the morning till 5 o'clock in the afternoon, and I've not placed a trade, all because the owner was finding an excuse to, let's just wait, let's just watch and wait. So I experienced this by proxy. And as a young trader wanting to earn his commissions, I didn't care about the damn news. I just wanted to make my money. I wanted my 15%, and he's causing me all this problem. I didn't last there very long. Obviously went out on my own, but I got to experience a lot of these things by proxy. So I never went through them directly, but I was directly impacted by all of these things is all I'm trying to get to. And we've had these things happen to us over the years. So very early on, I was able to see that, I don't want to experience that. I saw very quickly that, hey, you just saying, let's not trade this alert, this setup, this signal is causing me to lose my money. So I had this negative impact. It was costing me money by not placing the trade. And if we'd put the trade on, it would have worked out fine. Okay, some did, some didn't, but we got money management in place, blah, blah, blah. Now, the only reason that I don't place a trade these days is if earnings is tomorrow, then, or maybe next week in a few days, that's the only reason that I'm personally going to wait. And even though that might be the situation, I'll probably still place the trade. That's the situation that I'm in right now. Like, I don't pay any attention to the events. If the trade sets up, the trade goes on. Think about that. The trade sets up, the trade goes on. When you tested your strategy, when you went back over the last 6 months, the last 2 years, the last 20 years, however much data that you went through, you didn't look to see if there was earnings. You didn't look to see if there was a report. You didn't look to see what news came out on the day that might have caused you to make an alternative decision. You just traded the setup. So why we do anything different these days, or like in present day, we didn't consider it in the testing phase of your strategy, or any strategy for that matter. So reasons to not trade. Let your data decide the decision for you. You don't really want to pay attention to news events, earnings, NFP, CPI, PPI, Fed meetings, FOMC meetings, central bank announcements, employment changes, some weird headline in the news. Maybe Jim Cramer's banging his drum about something. I don't know. Some random tweets. The market looks funny. It's behaving weird. There's a why in the day is a reason. What's your reason? What have you done to hold you back from a perfectly valid on-strategy trade? So what's your bullshit excuse? Again, I've had my fair share of them. We've all done this. But when you have a proven system to trade, you can test and validate your expectations. Now, you hear me every week talk about my not just the strategy, but my thought process, the methodology. Can you fit your strategy into a production line? The first step for me is to have a mechanical scan, a mechanical assessment, a replicatable process to find, filter, and sort the best opportunities today. And this for me is time saver. It means that I can go rambling, or do an urban ramble. It means that I can go and do things. It means I can do these workshops because I enjoy doing them. I'm not having to spend hours researching opportunities. I've researched a strategy that allows me to find them. So a mechanical scan, click, click, and pick, put an opportunity, 2 or 3 of them. We're going to look at them later on. Find 2 or 3 opportunities today that make sense. Then we want to visually confirm, does the picture I'm looking at, the chart that I'm looking at right now, the setup that I'm presenting with, does it match one of my perfect blueprints? We've got several examples of what a good trade looks like as defined by many, many past sessions. But does it look like what I'm expecting to see? And if the answer is no, because the mechanical scan is going to put some stocks in front of you that just don't make sense because it's a mechanical scan. And again, if we think about this production line metaphor, this is quality control. This is the quality control step. You're going to have a production line, the mechanical arms and mechanisms, they've put the thing together, the widget in the manufacturing factory. And there's a quality control. Yeah, are all the parts screwed on in the right place and the right way around? Oh, bugger, it's upside down. Right, flick it off the production line, put it in the recycle bin, come back next week. That's what this visual confirmation hack is. It's just a quality control, and that's important. And these 2 things for me go hand in hand. Now, unfortunately, this is the part that I can't code. I can't code that because it's the human elements. We can go 90. I do believe that we can go 90% of the way to the finish line with automation. I've shown you this many times. I'm going to prove it to you in a moment. But we can go 90% of the way towards automation. And then we still need that quality control, the human elements. Then we need to manage the trade. We want to know our entries, our exits, our stops, our targets. And then we want to go and put the trade on so that we can manage our entries, our exits, our stops, and targets. The real secret to any success, it's not the money that we could make, it's the money that we keep. We want to manage the trade effectively. And we have a production line checklist for the trade management aspect of the trade. So that's the production line that we want to follow. And this allows me to not worry about the news. The first part is we've tested a strategy, and it allows me to get results. And not just me, I promise everyone, like, you should be able to replicate what I do. So we have lots of student wins, students who follow the similar process, who are saying, look, here's what I did today. Here's what I did today. Here's what I did today. So it can be replicated when you've got a demonstratable process and you've got a strategy that you can test. We don't take into account anything other than the setup. We're not looking at the news, or certainly I'm not looking at the news. I'm not looking at which way the wind is blowing. I'm not looking at who's tweeted what today. I'm not looking at the fact that, the market's down in the last hour. I don't care. We saw a lot of that earlier this week. On Monday, Tuesday, Wednesday, the markets had pretty much a hissy fit. The crypto markets crashed. If you follow it like that had ripples across the financial markets. Like the whole world lost their shit this week in one form or another. And the reality is, fast forward to Friday, it's no different to where it was this time last week. It was nothing more than a hissy fit. So how do we avoid that? It's not impacted my portfolio. So what we want to do is we want to ignore all the bullshits. And we just want to trade the setups that make sense per your strategy or my strategy if you're using it, and on the best stocks possible. And this is what I teach all my traders. I'm teaching you to find the best setups on the best stocks that make sense, and not to have blind faith and just put the trade on. I explain what goes into the system. It's not a black box system. But when you have definition on the strategy, it means that you can test it. You don't have to take my word for it that this is a good strategy. So when you have rules and you've got a production line and you've got this, again, to use the metaphor, this manufacturing plants that can put 90% of the trade together, even without the human elements, the quality control, we can find some amazing results. Now, this is the most boring stock in the world. This is Tupperware. And we could probably go back to the 70s with Tupperware. There's enough data for us to test. Now, what we have, if we have $1,000 risk, so we've got regular risk no matter what the stock price is, you can see it on the chart at the bottom left there. We've got a steady equity curve since 1999. Again, I could go back a long, long time. We've got profitable long and short trades, and 48% of the time in the last 28 years, over hundreds of trade setups, they've been profitable trades. Just think about that. 48% of the trades are profitable. Now, I don't know if you know anything about the statistics of the stock market, but that's absolutely amazing. Keep in mind that trading the stock market, it's not 50-50. It's not up or down. Trading anything is, especially the stock market, it's actually a probability, just to be able to get the direction right, it's a 33.3% recurring probability, because a stock can go up, it can go down, and it can go sideways. It can stay still, up, down, sideways. So just to be able to pick the direction right means that it's not 50-50. It's not a coin toss. No matter what you've heard, what you've seen, what you've read, look at the numbers, look at the data. It's a 33% probability of just picking direction right. So the fact that we've got a 48% of the historical trades using the process that I've shown you in past sessions, we're going to touch on it again now. But the point here is that no news events have been considered. No news events, no earnings, no news, no economic good situations, bad situations, tweets, nothing was considered. So the same with AMD, a more, does it work with tech? Yes, of course it does. A steady equity curve since 1999, a little bit of a wobble in the middle there, as you can see at the bottom left, but nonetheless, it's a positive equity curve. We've got profitable long and short trades. Now this time, 52% of the trades are profitable, and no news events were considered. I'm not looking at FOMC, I'm not looking at interest rates, I'm looking at CPI, PPI, all the other EEIs. Pick your alphabet of choice for the reports. None of them have been considered. None of them. So why should we be concerned with finding a reason to not trade? If you've got a strategy and you've tested it, thoroughly fucking tested it, then why are you finding reasons to not trade? It's got to be human element. It's got to be fear that's holding you back. And if it's fear that's holding you back, fear of losing on this next trade, well, we know that on average, the trades are positive. We've just proven that. We've diminished that. So the human element is like, I'm still scared for some reason, the fear element. Reduce your position size, reduce it down to the point where you're not scared of the trade. If that means you've got to trade one share or one contract or one, insert the denomination of the thing that you're trading, you can trade fractional contracts now, fractional shares with some brokerages. So there's no reason not to manage your risk down to the point that's comfortable for you, without stressing over, bugger, there's earnings next week. I don't care. Starbucks, another long-term boring stock, and steady equity curve since 99, profitable long and short trades. It's all I mean by that is it swings nicely. I'm not cherry picking long only. I'm not short only. You actually, if you look at the thing on the short side, you actually lost a little bit of money. So if you just traded long, I don't know if you can see the numbers there, but if you just traded long trades, 58% of the trades are making money. If you just traded long. Now, I'm not cherry picking. I'm just saying, just aggregate it all. 51%. Actually, I've not updated the slide. My apologies. 51% of the trades are positive. But no news events are considered. Last one. In fact, no, I've got two more. Logitech. And now this for me has turned out to be a huge surprise. Logitech, they sell mouses. They probably do other things, but the equity curve is steady from a dollar gain point of view. Out of the thousands of stocks, and it dries my eyes doing it, but it's a necessary evil. I do it once a year. For anyone who's followed me for any length of time, I'm in the process of testing my universe of stocks, but I'm able to validate and create a data-driven top 50 stocks. This is my number one stock right now, based on everything that I've seen so far. I've still got a few stocks to check. But in the last 20 years, from a dollar point of view, there's so little drawdown on this. So even when it's wrong, it's wrong in a very small way. We're able to manage a trade without that human element. and there's no news events are considered. 51.7% of the time you're making money, and you're making money 3.4 times your risk. Think about that. The gains on this are huge. So it then poses the question, if I'm not thinking about news events, I'm not concerned whether will this trade work, and I'm just looking at the data, do you think there's a high expectation, a good probability, for want of a better description, that the next trade, and I can't say will for certain, no one can say that, but is it possible that the next trade might work out profitable? You've got a high confidence, the data, the history, there's no discretion involved. I'm not cherry picking opportunities. If you just trade every trade signal to signal, which is the worst version of any strategy, and this is not curve fitted, this is how I'm teaching you every week to trade these setups with no news events. There's no reason not to place the trade. Is it possible that the next trade might work out? Just a thought. So what's your reason for not placing the trade? It's not the strategy's fault. The data proves this is a good trade. This is a good strategy. So what's your reason for not placing the trade? Last one, Weight Watchers. Does everyone kind of get this? When you've got a strategy, it means you can test it. Like go back over to, even I used to do all this manually. It used to take me months to do these things manually. Now I can just click a button, which I've got to admit, I'm really excited about. I found a good programmer. But again, Weight Watchers, the most boring, unsexy, non-tech stock. We looked at a few tech stocks, but the most boring stock in the world. 46% of the time it's making money. Why would I not trade this? Why would I not trade this? I'm not considering any news events whatsoever. So you've got quite literally my top 5 stocks. You know, if you just want to go back, these are the some of the best performers. Tupperware, AMD, you've got a little bit of tech exposure, Starbucks, retail, Logitech, Weight Watchers. You know, it's you've got some of my top stocks at the moment. Like, I'm not going to apply any discretion. I'm not going to do I'll just wait till tomorrow. I'll just wait till the news events. The data's showing me, you know what? Don't worry about any of that. If anything, it's going to magnify the trade opportunity, because certainly in my experience, and one thing that I've told most of my insiders and most of my traders over the years is, I'm quite happy to trade through news. I've always been happy to trade through news. And typically 6-7 times out of 10, the news magnifies the trade opportunity that we have anyway. It usually does. It doesn't always. I can't say that it always does, but usually 6-7 times out of 10. And now I can validate that without taking any of the bullshit, any earnings into account. Like, just trade the setup. It's probably going to magnify and speed up what was already happening. If you're buying the dip in an uptrend, news is probably going to speed that move favorably for you. So I've got to ask, what's your bullshit excuse that's holding you back? What is the reason that's holding you from placing your next trade with your strategy? Is it lack of confidence in the strategy? Do more testing, do more research. If it's fear of losing money, reduce your position size to a comfortable level. You know, there's no reason not to place a trade when you've tested your strategy. So if you're in that situation, more research is required, or reduce your position size. Probably a bit of both. Put more definition on the rules. For example, we're going to look at it in a moment, buy the dip. Well, what does that mean? What does buy the dip mean to you? That's all I'm doing. All you've got to do is buy the dip. Sell the rally. That's all this strategy does. It buys the dip, it sells rallies. Trades the trends, for want of a better description. All I've done is define what the trend is and what the dip is in as much detail as possible. And then I've applied the money management rules that I like to use. And that's what that strategy does. So if you're not sure about placing the next trade, it's reduce your position size on the assumption that you've got a proven strategy. If you're not sure about the strategy, then you need to do more research on your strategy. And if you need help with the strategy, well, you can always buy other people's. Like, I let you know what my strategy is. I mentor people and help guide you through the process. I'm not the only one that does that. I'm not naive enough to think that my way is the only way of doing it. What I'm hopefully helping you do is to save the 20-year learning curve. I've spent the last 20 years figuring this out so that you don't have to. So production line process, one more time. Mechanical scan, have a reason to take a big list of stocks to a small list of stocks. That's the mechanical, repeatable process that we've just been through. Visually confirm, does it look like the picture? Does it look like the label on the tin? Buy the dip is what we're looking for. Does it look like how you've defined what a good buy the dip opportunity is? We're going to look at an example of that on Twitter, which is what we use at the moment. And then apply your money management. There's lots of ways to skin this cat as well. I've got my preferences. I've got my production line process for profitable trades. Well, I think we've got all the P's in there. So again, one last time, what's holding you back? More research on your strategy, reduce your position size are the two things you want to take away from that. Now, if you need help with the strategy, I do have an all-inclusive mentorship program. We go through this production line trading process that you can learn quite literally in the next 7 days in less than an hour a day. And when you get used to it, you can do what I do. I spend 10 to 20 minutes a day or every other day. Thursday, for example, Wednesday, I went through it and realized there was going to be nothing to do for me on Thursday either. So someday you don't have to do it every day is the point. You'll be focusing on the best stocks, the best patterns with proven data-driven. You can go back with as many years as you've got for data. We've just gone back through the last 20, 22 years. And then we've got the TTE trader management. It's time out, target out, exit out. There's only 3 things that a stock can do. It can go up, down, or sideways. And the money management rules allow me to cater for one of those 3 things. My average return on capital as I use options to trade is about 85%. Sometimes the trades are more, sometimes the trades are less. That's just the way that I roll with my strategy. Once you've mastered it, you can spend as little as 20 minutes a day doing it, and you should see results over the next 90 days. If you don't, I will work with you until you do. You'll build trade confidence, so you'll never worry about should I be placing this trade. And you'll be able to transition into the best possible trader that you can be. You'll never have to zombie trade. You never have to spend hours flicking through chart after chart after chart. We're going to look at this in a moment so you can practically see how it's done. Just zero in on the most important stocks today. If you've got a short list of the best stocks, historically speaking, then my universe of stocks suddenly goes from 28,000. Again, as I already mentioned earlier, I've got a top 50. You've seen my top 5. You could just trade those 5 stocks for the rest of the end of days if you wanted. Anyway, you won't stress over whether the markets go up, down. You should get confidence by profiting in both directions. You won't be reading boring company reports, and you should be able to profit from swing trading with this style of trading that I'm showing you in about 20 to 30 days. That is typical for a trade for me. And again, in any market condition, as we're seeing right now, up, down, sideways, it works over the last 20 plus years. So that's my invitation to you. If you want help with your strategy because you've not quite figured out creating your own, then do you want to be next? If you do, then you can go to AntiVestor.com. Just follow the process. There's a 14-minute video that just explains everything in a little bit more detail. And if you'd like to work with me, then please feel free to do so. There's a few questions for you to answer. So this is always a reason not to trade. Hopefully you should see now that there's no reason for you not to trade when you've got a proven production line process. So let's go and put all of that into action. Let's go and find some awesome stocks to trade so that you can profit from them. So let's go and do it. There we go. Right, one of the structures and one of the frameworks that we look at, so let's start with the markets.